Now, if you're from the US, you've probably heard of the credit score system, which rates you between 300 to 850. The higher the score, the better. And using these ratings, you get a score between poor and excellent. Now, you've probably encountered a few questions like, why is the credit score system even important? How does it even work? And how and why can it keep you from getting that job that you want? Now, there's also something called indeterminate credit, where the lender doesn't really know how to rate you on that credit score system, so they kind of cheat and just don't do it at all. But we're not really going to be talking about that today. Now, if you're new to this channel, we discuss topics like personal finance and getting through those first few years of adulting. So if you like that type of content, feel free to subscribe. Now, while they rate you on a scale between 300 and 850, how they actually get to that number is actually not so simple. This is done by judging you on 5 main categories. The first one being payment history. This is actually the single most important part that they judge you on, accounting for around 35% of your total score. Now, if you think about it, it kind of makes sense. Put yourself in the lender's shoes. If you're lending somebody money, you want to see a record of how well they pay their debts off. And if they don't pay their debts right, then you're probably not going to want to lend them money. There's also a misconception that you shouldn't pay off your debt in full. Now, this is not actually the case. Again, think about it in the lender's shoes. Do you want somebody to pay you part of the money that they owe you, or the full balance? And that's what brings us into the next category, amount that you owe. Now, this accounts for around 30% of your score. Now, if you have a credit card, you've probably noticed that you receive a credit limit on that card. It's not advised that you spend your entire credit limit within that month, even if you pay it off. But the rule of thumb is to spend around 30% or less of that credit card limit. Now, this is because the bank does not want you to spend the entire limit and not be able to pay it at the end of the month. So spending less than 30% of that credit limit makes you look like less of a flight risk to them, and in turn, a good customer. And by paying off all of your debts on time, you receive the next category, length of credit history. Now, this is about 15% of your credit score. As the time goes by, you give the banks more data to work with. The more history of on-time payments, the more comfortable the bank is to lend you money, and in turn, your credit score will go up. You see, the bank actually likes to get data on you to see whether or not you're going to pay them back on time, or even pay them back at all. Now, the last two account for around 10% each. And the categories are new lines of credit, as well as types of credit. Now, types of loans can include student loans, credit cards, car payments, mortgages, personal loans. You get the gist. Now, if you just have a credit card, I wouldn't worry too much about getting different types of credit. And the reason for that being, I don't advise to just go into debt just to check that box. This is one of the least impactful categories for a reason. And if you actually open up a new line of credit, your score actually might take a small hit in the beginning for just a few months though. Now, this is to ensure that you don't go opening multiple lines of credit, running up a debt, and not being able to pay it off, and the bank being stuck with the bill. Some jobs even use your credit score to decide whether to hire you or not. Now, this was more commonplace with financial institutions and businesses with, secret sauce. But these days, it's become more and more commonplace for employers to use your credit score as a factor in their hiring process. I mean, even finding an apartment that doesn't run your credit score is becoming more and more rare these days. So you're probably saying to yourself, if I'm a good tenant and I pay my rent on time, then my credit score is gonna go up. What's the big deal? Well, it doesn't. But if you'd like to maybe know some of the things that actually affect your credit score, or even if I forgot some things, let me know in the comments below. If you found this video helpful, feel free to share it with a friend. And thanks again for watching, and I'll see you guys in the next one.